The other, I think, big factor which hasn't been discussed enough, if I'm being honest, Andrew, is regulatory action. It has, in a sense, become the single largest headwind to companies in the BFSI space, whether it's SEBI, whether it's RBI, whether it's problem with IT, or draft regulations talking about higher provisioning. Has that made you a little wary of this entire space?
Yes, it does. I mean, I can see the reasons behind it, and obviously, it's good for the longer term kind of health of the sector, because you don't want kind of unsecured loans kind of ballooning and then some problem in the economy. That's what the RBI wants to kind of fight against, given past experiences. So I don't think it's a bad move in the longer term, but short term it just gives that uncertainty of what's next. Could there be something else that's going to come out? So banking sector or the financial sector was just starting to outperform, right? And then you had this extra regulation come in, which has dampened the sentiment. And of course, now we wait for, who's next or who could be next. And that uncertainty doesn't help. Markets don't like uncertainty. And therefore, that's why you've probably seen the volatility, not just within the sector, but within the market increase as well. So I think that's one of the factors which is keeping our markets down, rather than we should have had. I think the banking sector should have had a bigger rally than we've seen so far.